Today is May 22nd, 2025, and today we're going to discuss volatility. So, yesterday, the Dow dropped over 800 points. In April, stocks were down 20%. They've largely recovered, even with yesterday's debacle, and they are trading very close to all-time highs. But what we are experiencing is extreme volatility. Again, in 2022, stocks dropped 19%. Bonds dropped even more. They dropped 26%. So it's not really, you might think it's a world of buy and hold because, it all seems to be coming up roses. But our experience with recessions in normal times is that it can take years to crawl back to even. And with a recession prediction of 35 to 50% this year, it's a pretty good idea to make sure that if we are picking stocks, we know how to manage the volatility and create opportunities. And we also can learn a little strategy that allows us to get hot in those very companies that we appreciate without having to babysit them. That's in an easy strategy that I'm going to be outlining in this video conference, so be sure that you watch it completely. It's only about 25 minutes. We'll get started in just a moment. Okay, so I do have some slides to show you. Let's get started. So again, stock picking in a volatile world full of pitfalls, misleading, self-interested information, and much more. This is a chart of what happened last year. As you can see, Bitcoin was so powerful that it makes everything else look like it didn't do much, but large cap stocks earned over 20%. Gold was up as well. Bitcoin in 2023, same thing, but stocks were up over 20%, large stocks. Now, the secret here is that if you didn't have large cap growth, you didn't have what's known as the Magnificent Seven, then you were not participating above 20% in 2023 and 2024. You were actually under 10%. So that's one of the ways that we can, without having to own the individual members of the Magnificent Seven, you're going to see them in just a moment, you can actually just have large cap growth or have also an extra hot slice of breakthrough technology and get even more exposure to them. So that's one of the ways that we can, and I'm going to show you how the pie chart system works towards the end of this presentation. But that's one of the ways how we can manage the opportunities and the volatility. So these are the 7 companies of the Magnificent Seven. They were the all-stars of 2023 and 2024, but they were the worst performers of 2022. So Tesla was down 67%. Bitcoin was down 67%. Most of the Magnificent Seven was down at least by 50% or more in 2022. Now, again, 2023 and 2024 makes it seem like buy and hold works. But again, that's not what we see in the history of the 21st century. It's something we see post-pandemic when we printed up over $5 trillion to try to keep us out of a Great Depression. So today's world is extremely volatile. We do need to have a plan for managing that volatility and a plan that puts us on the right side of the trade. And the beautiful thing is that the pie chart system that we have been using since 1999 earned gains in the recessions, outperformed the bull markets in between. And part of the reason is that you are rebalancing it once a year. So if it shoots the moon, you're keeping those gains and keeping that wealth. You aren't just going, oh, I made money. Oh, I lost money. Oh, I made money. Oh, I lost money. So again, this is a chart of the 2022. And as you can see, long-term government bonds were the biggest losers. And by the way, they lost again in 2024, and they didn't really make up anything in 2023. So the safe side of your portfolio is as important to know how to avoid all those paper losses because that can wipe out any income you might be earning. Your financial advisor might be saying, oh, you're earning blah, blah, blah income, 5%, 7%. I see this all the time in my private coaching practice. And the truth is, it might be under 2% or negative when you factor in the expenses, the fees, and the paper losses. And of course, paper losses are real losses if you need to access that money and your wealth has gone down and your FICO score has gone down. So those people that have been using our strategies on the safe side, because we were warning against those long-term low credit quality bonds, they are not suffering from paper losses, and your earned income is way higher because you don't have the expenses and the paper losses, but it's also higher. You can get a high quality, shorter term, shorter duration yield that's better than these long-term things. And that's not even counting in the paper losses. Once you count those in, it becomes invaluable. So that's what it looks like when you look at various assets, right? So the S&P was down 19.44, Tesla down 66, Bitcoin 67, the Nasdaq, which has got a lot of biotech and tech, down 33, and of course the ARK Innovation Fund, which has a lot of Magnificent Seven type stocks, was down 65. So let's look at a Magnificent Seven stock report card. And what you'll see here is that they really are magnificent. They are selling a lot more of their products today than they were selling last year. Their net margins are unbelievable. But if you know anything about price earnings ratio or price to sales ratio, these are extremely expensive. And what that happens when we'll talk about that a little bit more, but that's where the volatility is coming from, is that investors have purchased these and they're saying, I'm going to buy Nvidia now because it's really going to be worth this much in 3 years. And if there's an earnings report or anything that changes the game between now and then, they're like, oh my goodness, I priced it out here, but now the whole landscape has changed. Sell, sell, sell. And of course, that's when the price goes down. So we see these extreme swings. Again, the Magnificent Seven in April, when stocks were down 20%, they were the ones that were really dragging it down, much more than the general marketplace. So even these all-stars of Wall Street, they are creating extreme volatility, and it all has to do with them being very expensive. And one other way of seeing this is that Tesla earned $7 billion last year. It's worth $1 trillion. So that price earnings ratio, the price to sales ratio, those are just astronomical. So, when you are evaluating what things are going to do, remember that you want to use tools that work. You don't want to just read a headline or an email that came into you, right? It has to be, okay, this is the company. I think this industry is hot. Line up the competition. Is it really as hot as you think it is, right? Is the share price super expensive? So the stock report card asking the 4 questions, and then we have other things that we have to do because stocks in general are so expensive. So, what do you think is going to be hot this year and going forward? Is it quantum computing, AI, electric vehicles, robotics? Whatever it is, we're still going to have to put it through that scrim of whether or not it's really as hot as we think it is. That's something we do on day 2 of our financial freedom retreat. Then, if you do think that that industry is hot and there's a lot of the companies in there are super hot, you can buy a fund, a targeted fund. Breakthrough Technology has a lot of the Magnificent Seven. There's an artificial intelligence fund, cybersecurity fund. Give me 1 second, I'm going to cough. So pretty much any industry that you are interested in, you don't have to have that extra babysitting task and volatility that one particular company can have. You can get a targeted fund. Now, if it's trading at an all-time high and you don't own it, then you need to have that age-appropriate, properly diversified plan and think of it as a hot slice and maybe even dollar cost average into it. Now, they may sound like a lot of work, but it's actually, once you learn the pie chart system, very easy, very manageable. It's less time, it's less money, and it works, which is as important. We teach that, by the way, in the Financial Freedom Retreat, and I also talk about it in my best-selling book, The ABCs of Money, 6th edition. So is the good news already put in? And that's the key here is that if we are buying at an all-time high, and that chart showed that S&P 500 is very close to its all-time high, is now the time that we actually capture gains and trim our slices back to the size they should be so that we keep our wealth. And that's probably the theme. And again, if you're just now starting out, then you might be using dollar cost averaging to make sure that you get into those slices. But most of us, if you're a working adult, you're going to have a 401k. I encourage you to have IRAs as well. So stocks are very expensive. The dot-com recession was the only period when they were more expensive. And the Great Depression, today stocks are more expensive than they were then by the CAPE ratio. So, what happens when stocks get very expensive? Volatility. In the dot-com recession, what we saw is that the NASDAQ Composite Index from its high of 5,000 in March of 2000 dropped 78% by October of 2002. That means $1 million goes down to 220,000. You might say, oh, well, it came back. No, it took 15 years to come back to even. So that is why we want a system that we rebalance at least once a year and that is age appropriate, properly diversified, because those people that used our strategy and were overweighting safe, which we encouraged people to do both before the dot-com recession and the Great Recession, we're encouraging people to overweight safe right now too. You can actually earn gains in recessions, as Milo Bolden did. If you'd like her testimonial, email info@nataliepace.com. We're happy to send you that link. So again, there are ways, and they are literally as easy as a pie chart to protect yourself from this kind of volatility. If you are going to pick individual stocks, then you need to be using the same tools that professional hedge funds and their analysts use. I just did a stock masterclass. If you would like to join us at the June retreat and you'd like access to that stock masterclass, email us and register for it by May 31st. And just let us know that you would like the access to that for free as your free gift. You must register by May 31st. And by the way, I would recommend that you attend the retreat before you watch it because on day 2, we talk about all of the tools that you're going to need to start using in order to actually tread water in the stock masterclass. So again, with stocks at an all-time high, after we do all of our analysis for the individual company, we have to ask ourselves, okay, what is the industry likely to do? What is the marketplace going to do? As an example with Tesla, right? Tesla has the top selling sedan in the world, gas guzzlers included. But the industry has hundreds of electric vehicle companies, most of which based out of China. China is the biggest market, so a lot of the Chinese are buying, EVs made in China and designed by China. Tesla is still a very popular car there. But in order to compete with all these other companies, they had to lower prices. So we have seen how that affects Tesla. They went from 14 billion in net income in 2023 to 7 in 2024. So this is something that negatively impacts their company, right? And then you have to ask yourself, what's the marketplace going to do? And we do have a slowing economy this year, 1.7% GDP predicted. We had a slight contraction in the first quarter. And we have a prediction out there that 35 to 50% likelihood of a recession this year. So that's all things that will come to pass. And again, the recession isn't announced until at least 6 months after we're experiencing it. So that is why we always say, look, if it looks like there are economic storms on the horizon, now is the time when you want to overweight safe and keep and protect your wealth. You can still have game on in case the recession never materializes and stocks keep going up. So as another example of volatility, we had an undervalued AI company that I listed in my blog at nataliepace.com/blog. And it was up 74% within 2 months. And it only stayed there that one day. Now, I sent out an email. I posted on all of my social media. as a financial educator, I can't by law tell you what to buy or sell, but I can say, hey, we featured it here and it's up 74%. And, in this volatile marketplace might not be a bad idea to capture gains. So, we are able to educate you. The question is, did you get the message or did your ISP put it in spam? Are you following me on social media? So again, babysitting because the following day it was still up, but it wasn't up 74%. It was up more like 49%. And it's now down to a much lower price. So I want to remind you that when stocks are featured, they're actually being promoted on CNBC, a major newsletter, or even with the president when he bought that Tesla. It's a flavor of the month, right? So in the short term, stocks are a popularity contest. We saw that with the meme stocks. Hey, let's all buy GameStop. Let's all buy BlackBerry, right? But in the long term, is that company really viable? Bed Bath and Beyond was a meme stock. It's out of business. BlackBerry is on the ropes, right? GameStop never fully recovered. So it is a popularity contest in the short term. Is it really a company we love? Are we buying the products? Is someone buying the products? Who is that customer? So again, with Tesla, we get the delivery report about 20 days before the earnings report. So if you do want to know what's going to happen with Tesla, then July 2nd, look at the deliveries report and have a way of quantifying that to know whether or not how that's going to impact their next earnings call in about 15 to 20 days. We do that frequently. Again, this is an example of why and how I warned that the stock was going to go lower and then rally, right? And it's basically just having a an ongoing, I call it my Tesla math report of their deliveries and their earnings, and then doing a little calculation on the forward outlook for it. So again, second quarter earnings, the deliveries is announced on July 2nd, and usually their earnings call is around July 20th. And I already told you that net income dropped, and that's as a result of competition. I already used it as an example. Should a company with only $7 billion in net income be worth 1.13 trillion, which is 2 times more than General Motors, Ford, and Toyota combined? And as you can see here in this electric vehicle stock report card, the top sales growth, a lot of these are Chinese companies. They're not at all Tesla. Actually declined in sales growth in the most recent one. I can show you that. Hang on. Let's go back to that stock report card. You can see that its sales were lower. Now that had to do with the prices being lower, right, in order to compete. So sometimes what you're hearing on the media or you're seeing, or, we even had another administration official say to buy Tesla because the stock was cheap. But if you're really looking at the data, the stock is not cheap. Even when it went way down, still was really expensive. So there is a cult of personality. Their words move money, but so does data and fear, uncertainty, doubt. So when Jamie Dimon's team says that there could be a recession, people freak out. And if they say the tariffs are a problem, they freak out. And we see that's got a lot to do. It wasn't just him, but it has a lot to do with the analysts who said that tariffs are a problem. JP Morgan had put the recession at 60%, and that's when stocks dropped 20%. Again, they didn't close at 20%, and that's why it wasn't technically a bear market. When people were super excited about quantum, the CEO of Nvidia said, hey, it's not here yet. It's years to come. We got a lot of problems to overcome before that's viable. Peter Thiel is the chairman of Palantir. Almost everything he does ends up becoming a rocket ship, right? But is it overvalued now? Of course, Jerome Powell moves the markets because he determines where the interest rates are going. So another thing that you should be aware of is creative disruption. Now, I'm listing this because here we have Waymo, we have Tesla's robotaxi. What happens to Lyft, right? Did they invest in autonomous driving, or are their drivers going to be put out of work? Waymo is all over Santa Monica. I take it frequently when I need to. Also, is Uber in a better position? Is their air taxi viable? So, what is creative disruption? It is a new way of doing things that tosses out the old way. So, if autonomous taxis become the thing, then what happens to Lyft drivers, right? If aerial taxis, which Uber was investing in, and Archer and United Airlines and a bunch of other companies are investing in, become a thing, what happens to those road-based autonomous vehicles? So these are all things because the company that creates the game changer will become the company that's worth 10 times more overnight. We see this over and over again. I want to show you a slide. Oh, one other thing before I show you that. I am deep into the analysis of these aerial taxis, and I am going to be posting a blog. I may be doing a video conference as well, but I'm definitely posting a blog. So make sure that you are on our mailing list and that you have whitelisted me and check your spam for the EVTOL stock report card and analysis as it will be coming up in the next few days. Right? Email info@nataliepace.com to make sure you're on the mailing list and that we have your current email. Also, just go to nataliepace.com/blog. Okay, so winner takes all. Tesla moved into electric vehicles, and of course, GM, Ford, and Toyota were slower. Tesla is worth $1.1 trillion, and that is more than 2 times the value of these three companies combined. Apple is worth 3 trillion, BlackBerry 2 billion. Nvidia is worth 3 trillion, Advanced Micro Devices 184 billion. So again, and this is just an example, I already talked to you about meme stocks. Quantum computing, zero tier. Again, this is where the stock report card can sober us up. Don't just read an email. Oh, this is the next thing. You got to get in on it now, right? Because it might be a pump and dump scheme. If we look at this chart, that's what it looks like. You can hire people to send out a bunch of emails to get people to buy stuff. And then once it hits a great price, sell, 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 and you make out money. There's a lot of that that goes on. You can see that from this chart, right? Even all these other little dips here that it's taken. The stock report card will sober you up. And so that's why on day 2 of our retreat, if we think something is hot, we actually do a stock report card on that industry, the top 3 companies. And you can see, just like, look, the Magnificent Seven is hot. It's just very expensive, right? You can do that with other industries as well. So, as an example, here's cybersecurity. And again, the year-over-year sales growth is strong. Now, the net profit margins are not great, and that has to do with them investing in R&D. It might also have to do with GAAP accounting measures, so they might still have actually cash flow that they're increasing. So you need to understand these things. And again, if you don't, and you think cybersecurity is hot because maybe you've read my blog, again, I base all my things on data statistics and analysis, and I do not do pump and dump schemes. I've been in business for over 20 years, and I've never had one SEC investigation into my operating. I don't have, those kind of complaints at all. And you would, like other people that do, if you Google their name and you Google SEC, you might see a laundry list of times that they have been in trouble, paid the fine, and just started a new company. So, really important that you are understanding some sort of tool, whether it's someone you trust who does data statistics and research like I do, and tells you, hey, this is what I think is hot, and here's why. So, as an example, if you go to nataliepace.com and you go to my blog, let's go ahead and just open up a new window here. What you're going to see here is the most recent blog, but I always list other more recent blogs right underneath. So that if you were interested in utilities as a hot slice, you might want to read that blog first. If you're interested in oil prices as a hot slice, you might want to read that blog first, right? How about even if you just thought I should invest in Berkshire Hathaway, quantum computing, so robo taxis, Indonesia, copper is listed there, Ireland is listed there, Australia, that bargain priced AI company that I was talking about. So again, you can, you don't have to do it all yourself. And by just picking a fund and having it as a hot slice, you can have access to an improved portfolio, improved performance. And if it's in the pie chart system, when it goes way up, the slice gets too large and it's screaming at you, sell high. If you really believe in it and the market just dumped and the slice is a sliver, then you can buy at a lower price. So it is a system that's putting you on the right side of the trade. That's what you want rather than having to babysit, especially if you have a job. So headlines are one piece of the puzzle, right? You need to be, if you are going to invest in an individual company, you need to be asking yourself, what's going to happen in the next quarter? And there are tools that help you to determine that. We talk about it in that Stock Master class. How many of you are aware that Apple is not the number one smartphone provider, hasn't been for over a decade? Samsung is by units. What will happen in the next quarter and what factors are contributing? So again, one of the biggest issues is valuation. We talked about that. Stocks are very expensive. Also, I think it's important for us to understand what is it that will make copper companies do well, right? And a lot of these commodities, it's the price itself. What will make oil companies do well? Well, the price today is much lower than it was a year ago or 2 years ago. And that means that their profitability is going to be negatively impacted. At this price, they can't drill, baby, drill because it is unprofitable for them. So again, if whatever it is, and if you have an industry you'd like us to look into, email info@nataliepace.com. It may be something we want to look into for everybody's benefit. So gold and oil are also commodities. What could make them sink or soar? Lithium is a commodity, and a lot of people would say, "Oh, I think lithium because there's so many more electric vehicles." But the truth is, even though demand is more, supply is prolific. So prices have plunged in lithium. And these companies, many of them have come very close to, having to do bankruptcy restructurings. Also, again, sometimes someone will position themselves as a competitor, like Nikola did, and they will have all kinds of hot air being blown about that sounds real. If you are doing the stock report card, if you're really looking at the data, that can blow through all the hot air. That can blow it out of the room. So again, don't just read or believe things that come in your email. The founder was former CEO was charged with fraud and he was sentenced to prison. Of course, that didn't necessarily, if you lose a boatload of money and it's fraud, maybe you'll get some back, but it's going to take a long time. And that's really not a lesson you want to have to learn. So again, a targeted fund is going to help you to manage the volatility. Honestly, they probably wouldn't have even had those fraudster companies. They end up being less than 5% of the Wall Street companies. And analysts that are professionally paid to, put these companies in the funds, they know how to see through this. So, whatever it is that you're interested in, again, come and join us at our retreat on day 2. We can do a stock report card and look and see if it's as hot as you think it is. Here's another example. And by the way, when this company filed for their IPO, I immediately went and looked at all of their financials. And I immediately posted a blog that said, avoid this like the plague. It's way overvalued and its profit model is not viable. And then we started seeing other people doing that too, and they failed in their roadshow and they were not able to have the IPO and the CEO was canned and they eventually declared bankruptcy. But again, if you don't have time to do all of that, which if you have a regular job, you don't have time to babysit, then individual investing in individual companies is probably not right for you. But that doesn't mean that you can't get hot, right? Instead of Nvidia, have artificial intelligence. Nvidia is going to be the biggest holding in there. All right. And same with Palantir, right? You can have the cybersecurity. So these are just some of the things that we talk about. Again, I already showed you this slide. Targeted funds help to smooth out the volatility. Regular rebalancing puts us on the right side of the trade. This is an age-appropriate, properly diversified plan for a 30-year-old. So one more thing is that, again, if you wait for the headlines, it's too late, right? So we talked about NASDAQ falling 78%. The actual recession announcement didn't happen until the stocks had dropped over 45%. So you're closer to the bottom by the time you get the headline that we are actually in a recession. Same thing in the Great Recession. Okay, so you can, you can come back and ask me about these slides. We also show you these slides in our, financial freedom retreat. But one thing I want to make sure you know is that before you buy, know your exit strategy. And before you sell, use the forward outlook and the guidance and the industry and the macro economy. Don't just use the share price. Oh, I made money. Okay, maybe I'll wait until I make more money. Use the okay, is it going to make more money? And not a guess on that. Do the stock report card, look at the forward outlook, listen to the earnings call, and make an educated, it's still a little bit of a guess, but it's an educated guess, right? And then factor in what the market is going to do. That's key. You should always know your exit strategy. With the nest egg strategy, my exit strategy is I rebalance it once, twice, or three times a year. And if I think that for some reason this particular industry is no longer hot, let's say last year I thought oil was hot because prices were high, and this year I don't think it's hot because prices are low, then I would just get rid of it and start filling in a new slice. And we talked about dollar cost averaging if you don't already own it, and it's trading at an all-time high. So email info@nataliepace.com. We have an investor IQ test, a rebalancing IQ test. These are free. You can personalize your own sample pie chart with our free web apps, right? So go ahead and email info@nataliepace.com. Tell us what it is that you're interested in. And remember, if you register by May 31st, you can have access free to our stock master class, but you must register by May 31st in order to get that. So go to nataliepace.com, and if you click on the flyer, you're going to learn, all of the things that you'll learn in the master class. Sorry, hang on. I mean, in the Financial Freedom Retreat. You can also read testimonials. You can see the pricing. It's going to be online, so you can attend from anywhere. It is 8 to 4 Pacific, which is 11 to 7 Eastern time. All right. So I will be putting some of these links in the Q&A. I'm going to stop this here because I may have a couple of questions that people emailed in, and I want to make sure that I answer them. So hang on. Okay, so we did have a question, and I'm going to go ahead and show you what that question is so that I can answer it, make sure that we get all of it in. So, my boyfriend knows I take your classes, attend your retreats. He asked me what Natalie says about how the stock market is taking huge upswings and downswings. Interesting that it's volatility. He wanted to know why. I tried to answer as best as I thought Natalie would, but I figured I might just go ahead and post the question. I kind of figured it was about whale trading and their confidence in the decisions that are made politically, but I didn't feel like that was strong enough. Okay, so my response is going to say whales, broker salesman, and of course, I already told you the solution is have an age-appropriate, properly diversified plan that you rebalance once, twice, or three times a year. The biggest reason for the volatility is that stocks are expensive. A lot of people don't know that because you're not hearing that on the news, right? You're hearing even some of our politicians saying this stock is actually never going to be cheaper or whatever, right? And Probably, first, yeah, it's just not based on reality. Stocks are very expensive, and that increases the volatility and the speed. So you're always going to see the whales are the ones that make the money. So when we go back to those charts where you see that the markets have gone down, 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 Main Street waits for the recession announcement. We're close to the bottom then. So it might be already down 45% in the Great Recession or the dot-com recession. And then the announcement gets made and it drops a little bit more, but we're closer to the bottom. And that's when Main Street sells and that's when the whales are buying. So again, the only way that you can actually stay on the right side of all of this nonsense is to understand that the markets are very expensive. That's going to increase the volatility. There is definitely the economy is slowing down. Again, this is not political, right? The economy was expected to slow down before the current president entered office. There are certain business cycles that occur. Yes, we can do things that can help, and yes, we can do things that harm. The general consensus is that tariffs actually harm, but there is more to the story than just that. So I wouldn't be too swift to just blame politicians. What I would be very more interested in doing is saying, okay, what can I do so that I keep my wealth? And if things do shoot the moon, I have exposure to them. And the answer to that is age appropriate, properly diversified plan, four hot slices, rebalance once, twice, or three times a year. And you might say that sounds like a lot of work. It's less work, it's less time. If you know that the markets are that volatile, that's a lot of time and stress and things that might even worry you. If you know that if the markets are volatile, that your plan protects you from the volatility, or when you hear that they're at an all-time high again, that maybe that's a good time to capture gains, or if it goes way down, that maybe that you're so glad that you were overweighted safe. When you have a plan that works, it's less time, it's less money, it allows you to sleep at night. So that's what has to happen right now. And don't just say, oh, well, I have a 401k and I don't really know. No, there's all kinds of things that are really important. Just let's build a solid financial house for you. That's going to take a little time to construct it properly. And then once you get it constructed, you move in and you rebalance or spring clean once a year, twice a year, or three times a year. Thank you again for joining me. Remember, you want to follow me on social media because I am absolutely going to be talking more about VTOL, these aerial taxis, which I just saw an ad for one that's going to be apparently launching in New York City. And there's a huge demand because we have, traffic crawling. And you might say, well, why not just helicopters? They're loud, they're noisy, they pollute, they're expensive. And these VTOL, aircraft, small it's taxi aircraft, are really have a lot of benefits over helicopters. So I will be doing a report on that. And the only way you'll know about it is if you're on the email list, so info@nataliepace.com to join us, or if you're following me on social media. And again, the easiest way for you to do that is just go to nataliepace.com and underneath my picture, you'll see Facebook, X, Instagram, LinkedIn. That's for emailing us. That's our Spotify, YouTube, podcasts, and of course, I'm also on Substack, so you can go ahead and subscribe there as well. I would strongly recommend that you subscribe at YouTube and Substack so that you're notified when I do these free video conferences and free podcasts. Thanks again. Join me June 6th through 8th for the Financial Freedom Retreat, June 14th for the Real Estate Masterclass. Life transformational. Most people report earning back the price of the retreat in budget savings in the first few months. And then, of course, you've got thousands annually that you can spend on things you like a lot more than paying bills. Really, it is a complete money makeover. So do join us. Thank you.